Good afternoon, good morning, good evening, everyone, and welcome to Diary of a Trader. Today we're going to go over how to trade a reversal. Now, one of the biggest problems in all of trading is trying to, well, it's actually not a problem, it's a mistake a lot of us make, and I'm guilty of it too, like anyone else, but it is trying to identify when a trend ends, okay? That is often a very, very dangerous thing to try to do. There are ways to do it. It requires a lot of experience, a lot of study, but ultimately, once a reversal has occurred, or once a trend change has happened, how do you trade it? Do you continue trading in the direction of the reversal, or is that reversal just another continuation pattern? Well, there's several ways that you can do this. I'm going to show you one way using a non-time volume chart, which is point and figure. Now, point and figure analysis is a chart form that requires that does not account for time or volume. All right, so there is no time factor involved here at all. Just because on the bottom of the screen it lists some months and the years, that doesn't matter. How much time it spent creating one of these columns of X's or O's, it does not matter because we do not record time. All we record are reversals, and that's what all the X's and the O's are. Now, in point and figure analysis, you are always trading in a bull market or a bear market. So depending on your time frame that you normally trade, you're going to find point and figure either a chart form that is too fast or too slow. So basically what I'm saying is that here's there's objective downtrend angles and objective uptrend angles, okay? The 45-degree angles, that's what these are called. Those are called objective angles. They're not really 45 degrees, but they only require 1 point, and you always draw them from an X to an O or from an O to an X. And as long as price is below that line, we are trading in a bear market, so we have a short bias. If price breaks above it, like it did over here, we change it up. We transition from a bear into a bull, and then we just take the outermost angle that's going to generate that trend line. That's what we trade. So here we would have converted bullish. It broke down. We would have reconverted to the bear side of the market and only shorted. Over here we would have gone bullish and so forth. And this goes on and on and on and on. But overall we can see, okay, well, the Aussie dollars, it's, even though we don't measure time, we know it has spent a long time trading lower. I mean, we can figure that out, that we're going on 2 years actually, from January of 2018, and we're getting close to January of 2019. We're getting into that 2-year period. So when we get to reversal in a point and figure chart, especially after we know that we have converted from a bear to a bull, which we have done here. This was the last bear angle we broke above. In a point and figure chart, the reversals are very easy to spot because this is a 3-box reversal chart. So, we have a column of O's here right now. If price does return higher, if it does move 3 boxes worth higher, it will form another box of X's with a triple top formed at 69.20. And so the reversal entry, the trade here is at a breakout of that triple top at 69.40. Okay. And you can see that on my chart that has been there for a while. That's been there actually since, well, I guess not a while, just a little over a month, that trade idea has been there. I date the entries that I want to take on the trade ideas because I like to have a good reference of time, even though we don't record time on a point figure chart. So that's just one example of how to trade a reversal. Again, on a point figure chart though, just because price breaks a trend line, we don't enter. The only time we enter a trade on point and figure is when price has broken some type of multiple top or multiple bottom. All right. If you don't like point figure, you're more into the contemporary point figure analysis, or not point figure, but Japanese candlestick analysis. There's another way that we can do this. So this is a little bit of Gann analysis, but any chart that you trade, go to the daily chart and get a time measuring tool. On TradingView, it's the 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7th toolbar down, and it's a date range. Okay. and you're going to want to make it'll measure bars and it'll measure calendar days. So in Gann analysis, there are cycles of the inner year. And this is a real quick crash course. Basically, 45-day moves are important, and the most important 45-day moves are the cardinal directions on a compass, which are 90 degrees, 180 degrees, and 270 degrees. Okay, so it's basically north, east, south, and west. Okay, 90, 180, 270, 360, or 0. And so from any important swing high or low on whatever chart, on a daily chart, plot out 90 days, 180 days, and 270 days. Okay, there's others in there. There's the tri numbers, which are like 30, 90, 60, 120. Those are very important too. But the cardinal directions are the most important. So the most important Gann cycle of the inner year is the 90-day cycle. And Gann wrote that, if something has been trending, up or down for 90 days, then it will more than likely face a trend correction, a trend change, or a corrective move. And he said that if the move during that 90-day period has been really fast and strong, then it can extend to 99 days. So the 90-day can go from 90 to 99 days, and the 180-day can go from 180 to 198 days, and then the 270, you can figure it out from there. So from this swing low, on May 6th, 2019, we saw the euro pound trade up. Where did it reverse? A swing top right at the end of a 90-day cycle, 98 days right there. Okay, so we measure out from this cycle. And from that swing high to here, we get to the 120-day cycle. All right, that is within the 120-day cycle. And so you're often going to find markets swing off of these 30-day and 45-day moves. It's really fascinating how often this occurs. But those themselves, that is identifying a potential reversal time, but it's not identifying, where a reversal would occur price action wise. Okay, that's where we use other tools of analysis, and that's, if there was some type of support or resistance line here, and there probably is. I got to check out my other charts here. I know I probably have that there. Oh, I got to look down here. Well, I need to update those charts. Well, I'll just go back to what chart we were looking at. So, let's say I knew that there was some type of support or resistance level there. Well, even if I don't, if I know that, around that 90-day period, that's where I'd look at my indicators. Okay. I would look at the composite index, the RSI, and the percent B. I would look at these and see, are these in an elevated position? Is there some type of peak? Is there some type of divergence? When that occurs, I say yes, there's divergence here. It's not detected between. See, here's the deal. This is why I love the composite index. So there's we got higher highs here in price, and the RSI is even showing higher highs, but there's a divergence where the composite index is at. Okay. The composite index will detect divergences that the RSI is unable to. All right. So there's a regular bullish divergence between the composite index and the RSI. And when I see the RSI crossing below its averages and the composite index below its averages, that's the signal to short. And the signal to short is also the added benefit of the strength of that decision to short is when we see the percent B cross back down below the 0.8 level in the percent B. And, the inverse of that is true right here. So really one of the things that you can just look for is similar peaks and troughs between the RSI and the composite index. Those will show you stuff. But, right down here, I mean, same thing. We got to these extreme lows. It's a Gann cycle, 120-day cycle. We're crossing back up above the 0.2 level in the percent B, and then I see the composite index and the RSI are both crossing above their averages. So that's one way to trade a reversal and get into it, and then just hang on to it until it reaches your profit target. I hope you found this video helpful and useful, and I look forward to speaking with you in our future videos. Have a great day. Bye-bye.